CIGL down a further 26.15%. Yesterday, the 10th of July, it lost 79.91%. It looks like it looks like a sort of company that may be vulnerable to also some manipulations and all that stuff. Incorporated in Singapore, provides technology, but some physical manpower and technology to deliver security solutions. So going by the data we have, the current market context is that yes, the stock has experienced a catastrophic decline of around 86%. Look at that. This was as of the close of Wednesday the 9th. It was at 31.05. This the pump it up, and then they pull the plug or they pull the rug. You can see that gradually, and you can sometimes they're just newly minted stocks. See how it's been spiking. You can see we had a pullback, and it got a support from its 40. This is its 40 period moving average, and bounced from there and went up. And you probably think it's never it's and it actually has to that. It performed like that. It had that. The 40 period moving average served as a primary demand line, demand in the sense that each time it comes within one standard deviation, demand will grow and it will spike. It did that twice, and you probably be thinking, man, I'm going in now, and then look at that, it gets to the highs of $31 or thereabout, and then look at what we're facing right now. So even though it has technical signals that suggest this deep is a buy, you can't rely on that at all. So as I was saying this earlier on, it has experienced a catastrophic decline of a loss of 86.76%, with the stock opening 31.05 as of if you like, as of the pre-market session of yesterday the 10th. Um, but currently trading between 3.75 and 5.66 as things stand right now. So the price pressure momentum analysis, this is the analysis of its moving averages, that is the 10, 21 and 40-day moving average, 40 period moving averages. So the values of those, this is for the 10 period moving average, it's a negative 97.04, extremely bearish momentum, far beyond the trend mode. And then the second one, 31.91, strong bearish momentum. For the 40 period moving average, negative 77.38, moderate bearish momentum. All PPMs are in severe downtrend territory, indicating sustained selling pressure. The positive second derivative across all PPMs suggests the rate of decline may be slowing, potentially indicating momentum exhaustion. So market grid analysis, market grid just gives us a grid, a range, a channel that the stock is expected to be trading in. So current price is let's get a current price is 4.1. 4.1 is the current price. It sits between 6.88, that is the resistance one, the topmost resistance, and the just okay, yeah. So the stock is trading within its market grid as things stand right now. So it has since pulled back into that grid. What do we have on the here? No, on the on think or swim, it's still outside of that grid. So let's see what we going on. Let's see what we have. So resistance level probabilities. So that the top of that market grid, that channel, the probability of it testing that is 35% immediate resistance. And sorry, this is the top of the resistance is actually 14.87. Sorry about that. So it's trading currently between the R1 and the S1. So this is the lowest resistance, and the lowest is trading between the lowest resistance and the lowest support. Okay, so the probability of it testing 9.64 strong, which is a strong resistance, is 15%. Probability of it testing 12.4 is 8%, a major resistance. Probability of it testing 14.87, a 3% probability that's an extended resistance. So support levels, 1.94 for the 5% high probability target, 0.82. These are negative values, extreme oversold scenarios, and all that. So we're not really, it's not the chance of it going negative. It's not there because I mean, not possible. We don't trade negative prices. So trade setups. Okay, so short term, next 1 to 3 trading sessions. Bearish bias, 65% probability. Any bounce towards $6 or $6.5 area, you target your target will be a 1.94. So you stop at 7.5 if it works for you. If it doesn't go in, if it goes against you, stop at 7.5. So this is not I'm not recommending that you apply this. It's just that this has come up because I think it's expected that lower prices will continue to print. It's I mean I'm just this is how I feel about this stock. Is still going to print lower prices. For short selling. If you have a bearish bias, if it bounces towards 6.5. Let's see now. It's not there. Not hasn't done that yet. But if it does that, there's a good chance it's going to pull back again, and it will go severe. So rationale, extreme price pressure momentum reading suggests continued downside momentum. You see that? Yeah, continued downside momentum despite potential dead count bounces. So in the long term, this is also not recommended at all. Reversal 40% probability, entries between 1.5 and 2.5. So your target will be 6.88, a 35% probability. But this we have this 35% probability because the stock is currently at 4.13. Indeed, oh yes, indeed, if it pulls back, the probability will change. It wouldn't be a 35. It should be. It will decrease significantly. So there isn't. It's a bit rigid. The 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 model here is a bit rigid in reusing this probability again. In this scenario. So but yeah, okay, let's just say that will be your target, and then your second target will be 9.64. But this will be a wonderful trade. But the chance of this happening, I think is even though it says 40%, I really don't see it that way. So rationale, second derivatives in price pressure momentum suggest momentum deceleration. Extreme oversold conditions often precede a significant rebounds in gap down scenarios. So you can rely on this as well. So key risk factors, unknown fundamental catalysts causing the crash. Yes, we don't exactly know. Potential delisting risk, even given price levels. Yes, yes. There's a chance that it could even decay and plunge below $4 and even go below $1. Such things can happen. Low volume suggests limited institutional interest. This is just in this pre-market session, only 31,000 shares. Yeah, at the same time, it could still suggest that aggression is definitely well. We really can't say a lot. Aggression, so we can say aggression is behind this losses it has in this pre-market session. Now you can say that because when the volume is thin, then anything can happen. If the volume is thin, then you might see the exacerbation of the direction. If it's plunging and it's on low volume, expect that to remain in place. If it is spiking and it's low volume, expect that to remain in place, or even continue to do so. So, okay, yeah. Recommended approach: wait for stabilization signals before considering any long positions. The extreme nature of this decline suggests fundamental rather than technical factors are driving the price action. So yeah, don't rely on the stock. Okay, we have here upper projection of 30.66. You can rely on this. 30.66 is what we have seen here, as you can see. Let's look at the 3-hour chart. We also have 29.34. You can rely on this as well. Let's see, 2-hour chart. We have 29.34 as well. 1-hour chart. We have more realistic, a lot closer prices, much much lower prices, much lower upper projections, 17.85, even 13.59, 17.97, 20.67. So see what you make of CIGL. In my opinion, it's not a buy. Just watch and see. Never really a buy. Never really an investment. Um, Never really a trade as such. But if you know how to go about it, it's all up to you. Okay. So thank you very much for watching this video.